Losing €1 million in Berlin is very easy. No scammers, no crisis. Just make a few mistakes in calculations and planning. Most people lose not because of a bad market, but because they are confident it won't happen to them. Today, 50 real ways to lose a lot of money. If you are interested in the real side of Berlin real estate without rose-colored glasses, subscribe. It will get unpleasant, but very useful. Group 1. Market risks. The market is not obliged to meet your expectations. Point 1. Purchasing primary housing at the peak price. When the market cools, such properties are the first to depreciate, and the yield does not cover the overpayment. Point 2. The purchase of secondary housing with insufficient or even negative profitability on the rise. The growth may not come, but the loan needs to be serviced already now. The loss accumulates. Point 3. Belief in infinite price growth. Real estate is cyclical. When the phase turns, liquidity disappears. It is impossible to sell quickly. Point 4. Ignoring infrastructure plans. A new road outside your windows changes demand and collapses the price of your property. Item 5. Apartment on the top floor without an elevator. The aging population reduces demand, and the property subsequently sells very slowly. Point 6. Investments in the fashion segment at peak prices. When everyone rushes into one format, the margin inevitably shrinks. The exit is difficult. Point 7. Ignoring demographics. If the area's income is low, rent does not increase, and growth prospects stagnate. Demand is limited. Item 8. Buying for the sake of appearance, not liquidity. Emotion does not equal market price. In a crisis, such assets are the first to exit. Failure. Point 9. Ignoring macroeconomics. Rising rates reduce mortgage availability. Demand falls, prices adjust. The model collapses. Point 10. Purchase without understanding the micro-location. Reputation shapes demand. Without analysis, it is easy to overestimate the growth potential of the location. Price growth may not occur. Group 2. Financial risks. Mathematics does not forgive illusions. Point 11. Floating credit without a strategy. The rate increases, the payment increases. Cash flow becomes negative. Pressure is rising. Item 12. Ignoring ancillary costs. Taxes and notary fees consume tens of thousands right away. Profitability is lower than calculated. Item 13. Lack of diversification. One asset, one risk. A problem with it instantly impacts your entire capital. The investment portfolio is shaky. Point 14. Early sale. Profit tax eats into the margin. Exit strategy is not calculated. Potential is missed. Mistake. Point 15. Unrealistic vacancy calculation. Changing tenants is a pause in income, but the loan must be paid on time. Collapse of the model. Item 16. Refinancing at peak rates. New credit is more expensive, yields are falling, and selling becomes forced. Huge risk. Point 17. Lack of tax planning. Errors in the deal structure increase taxes and reduce profits. Systemic losses. Point 18. Unrealistically optimistic rental growth forecast. State regulation strictly limits rent increases, and the court may reduce the rent you were counting on. The forecast is garbage. Point 19. Work without reserve. Any repair creates a cash gap, and the bank begins to exert pressure on you. The price falls. Point 20. Lack of market analysis. Buying above the market means that your own capital instantly decreases. Overpayment cannot be recovered. Point 21. Ignoring the time factor. Any delays increase the interest for the bank and reduce the project's profitability. Group 3. Legal risks. Berlin is primarily about law. Item 22. Ignoring the federal law on rent control. Excessive rent will be contested and the refund of overpayment will become mandatory. Risks and expenses. Item 23. Purchase with a perpetual tenant. Evicting a tenant is extremely difficult under the law, which undermines the liquidity of the property. Rights to personal use of the apartment will have to be pursued in court. A positive outcome is not guaranteed. Item 24. Outdated heating and federal law on building heating regulation. Expensive modernization is required, which cannot be fully passed on to the tenant. Income is declining. Point 25. The scope of the law against gentrification. Renovation and redevelopment are restricted by law. The potential for price growth is blocked. Conversion is impossible. Item 26. Burdens. Hidden restrictions on the plot may prohibit any construction, rendering the potential fictitious. You overpaid. Item 27. The status of the architectural monument at the house. Any changes require lengthy approvals, and the work costs several times more. The timelines are endless. Point 28. Hope for daily rental with Airbnb despite the official ban. The fines are huge, and your income model will collapse at the first inspection. The property is overvalued. Failure. Point 29. Ignoring tenant protection. In Berlin, the law is always on the side of the tenant, not the investor. Income will be lower than expected. Item 30. Purchase of an object with legal disputes. The processes last for years, and the liquidity of the object becomes zero. Expenses are rising. Deadlock. Point 31. Conflicting tenant communities. Collective complaints and lawsuits will make managing your asset unbearable. Constant pressure. Group 4. Technical risks. Concrete does not forgive fantasies. Point 32. Ignoring Sonderumlich, financial reserves for repairs. Future work requires significant investments, and your returns disappear instantly. Cash flow is zeroed out. Item 33. Excessive repairs in a cheap area. The market does not compensate for the investments, and you incur a direct loss. The valuation is below the investments. Failure. Clause 34. Trusting the seller without verification. Hidden defects are discovered later, and repairs cost a fortune. The court won't help. Collapse. Point 35. Ignoring energy efficiency. High bills deter tenants, and the property's liquidity decreases. Modernization is required. Losses. Point 36. Purchase at auction without inspection. The condition inside may be catastrophic, and the savings may be merely illusory. Tenants may not want to vacate. Risk. Item 37. Contaminations and encumbrances on the site. Soil remediation is expensive, and the project may lose all its profit. The budget is exceeded by several times. Mistake. Point 38. Problematic developer. Delays and defects in construction quality will turn your investment into a nightmare. Resale is a dream. Collapse. Point 39. Extension without permission. Authorities will demand the demolition of already completed improvements. Money invested in vain, and the potential is fictitious. Project failure. Clause 40. Insufficient insurance. Any fire or major leak instantly puts your capital at risk. Restoration at your expense. Danger. Group 5. Management risks. Poor management kills even a good purchase. Point 41. Ignoring the protocols of the homeowners association. Hidden conflicts in the house affect the value of your asset and future expenses. Failure. Losses. Item 42. Purchase with rental arrears. Eviction takes a long time. Legal costs are rising, and your cash flow remains zero. Stress and debt. Item 43. Confusion between commercial and residential property status. The demand for them is different, the downtime periods are longer, and financing is much more complicated. The risks are off the charts. Point 44. Lack of an exit strategy. If you don't know who and when to sell to, your capital is simply frozen for years. Stagnation and deadlock. Point 45. A weak management company in the building. Errors in calculations and conflicts with residents lead to systemic financial losses. Loss of control over money. Point 46. Do not check the tenant's creditworthiness. A bad tenant means years of lawsuits, stress, and lack of money in the account. A failed investment. Point 47. Do everything without experts. Legal and technical mistakes will accumulate, and correcting them will cost several times more. The losses are systemic. A failure. Group 6. Behavioral errors. The most expensive risk is the investor themselves. Numbers don't lie. You are the risk. Point 48. Purchase under the emotion of urgency. The decision is made without analysis, and risks and alternatives are simply ignored. The price is inflated. Failure immediately. Point 49. Belief in guaranteed returns. Promises without real calculations always lead to disappointment. Risks are hidden from you. Failure is inevitable. Point 50. Working without cold calculation. Intuition replaces numbers, and your million gradually disappears. Mistakes will be repeated. Failure. The end. These were 50 ways to lose $1 million. The most interesting thing is that most people use 3 to 5 of them in one deal. Nightmare. Wake up. In the next video, I will analyze real cases with numbers. Write which block to analyze first: market, law, or credit. I look forward to your comments. See you.